Hey everybody, it's Chris Kirkpatrick and welcome back. We are here doing the mini-series for the And Asset. I'm here with Caleb Williams, the CEO and founder of Better Wealth. And this is the third video in this mini-series. And we've covered everything about the overview of the And Asset. We've covered control and use of your money. And I think a lot of people are very curious about what it looks like in retirement.
Yeah.
Like, how does this work in retirement? And probably from retirement, I would say even into like the legacy play, right? The transition.
And I will say this, when we talk about comparing this to different products, most people when they talk about life insurance, Chris, I grew up on this whole concept of just make every other investment look like terrible.
Yeah.
Like it's the worst thing in the world. And I'll say no, there's great investments. Even in the market, there's people that understand the rules of the game and are getting massive rates of return. And so what I want to do is I want to share this. And I believe the And Asset has a place for everyone. And like you saw in the two videos before, it's an and component. It's not prohibiting you to do anything in the future. It's not prohibiting you to do anything that you're passionate about. And so if you're early on in your life and you're watching this in your 30s, 40s, maybe even 50s, you can save your money into this and still be able to leverage it and do other things. But maybe you're watching this and saying, okay, how does this apply into my life in retirement? Or we actually get retirees that look at this and say, how in the world could I apply this? I'm almost too late. And I'm telling you, this and component goes both ways. And when you look at retirement, you have to ask the question, what result do I want? And usually, I don't want to put words in people's mouth, but usually it's two things. They either want cash or they want legacy. They either want a way of life, income, or they want to be able to pass it on to the people, the organizations,
For sure.
family.
Yeah.
Okay? So we're going to talk a little bit about this mountain, and I referenced early on, this is in the Better Wealth studio. We're in Denver, Colorado, so there's a lot of mountains, and a lot of times we focus on getting to the top of the mountain, but the sad reality is many people are dying going down, and it's a very sad thing. Okay, so we're going to highlight a couple just strategies for us that we're going to talk through, but I think it's going to be really, really important. So the first thing is what we're going to call the CEV, and the CEV stands for Capital Equivalent Value. One of my good friends, Brian Bloom, wrote a book on this, and it's talking about life insurance and why life insurance is such a powerful tool, and his whole point is cash flow. Let's start reverse engineering the cash flow that you get from instead of the number. For instance, a lot of people would say a 401k, if you have $1 million in a 401k, that would be better than a $600,000 in a properly structured overfunded life insurance. But the reality is, how do we what metric are we actually determining? And it should be the consumption, the cash flow that you're getting consistently and having the same timeline as it relates to your money running out. Yeah. And when you can take much higher distributions, when you don't have to worry about market losses, when taxes are eliminated, we're showing that a $600,000 And Asset will way outperform a $1 million 401k with those factors in mind. And so what's cool is with our company is we help you when you're nearing the stage reverse engineer what that is, and we reverse engineer it with the metric that you want to show. The same thing goes with legacy. If you want, quite frankly, there's no better tool to pass on your wealth than life insurance, because your money will pass on at a greater amount income tax-free to the next generation. And as we know, taxes can be one of the biggest wealth eroders. Huge. So the first thing is you could actually use the policy, and we've helped a lot of people transfer over a couple of years money into a policy and do it efficiently. So that's step number one. So the next benefit is the pension maximization. I'm just going to do Pen Max, and this represents our clients, because we get a lot of people who are in their 50s, 60s, sometimes 70s saying, Caleb, I'm seeing the And Asset. I love your book. I love this concept, but I feel like it's too late for me. And just like we open this up, like this is helping you show up powerfully in retirement. And the cool thing is the And Asset unlocks so many things, going up the mountain, but then also going down. And so we're going to talk about pensions and annuities, and we can have a whole series on the misconceptions that annuities have, that pensions have, and just like every other product, there are a lot of bad annuities. Oh yeah. Okay. Yep. But annuity 101 is you don't do this proper planning. You have a lump sum of money and you say, I can't play the market in retirement. Why don't I give it to an institution and they're going to give me a stream of income for a certain period of time or for life? Okay. So a common annuity strategy is to give up some money, give it to an insurance company. They give you a stream of income, and then when you die and most likely your spouse dies, then that money's gone. Okay. Now, a common strategy when we talk about this is a joint annuity, meaning this is going to be weird for a second. But you and I are married.
Oh, well,
sorry,
hey.
Hannah. And
sorry, Hannah.
And so you and I are married. We go in and we say, okay, there's a good likelihood that you're going to die way before me because you're older. Okay.
Oh, I am older.
and so what we're going to do is we're going to do a joint annuity, which essentially is when you pass away, I'm still going to get a stream of income. It's not going to be the same, but it's going to be something.
Yep.
Well, what are we buying there at when we're at
insurance?
We're buying insurance.
Because the amount of money that we're getting every month, because we're doing a joint annuity, is going to be far less than what we would get if it was just you on your own.
So the difference between a single annuity and a joint annuity is the amount of money that you get paid.
Cash flow.
The cash flow. A joint annuity, let's just say for this example, it's 5% for joint, and for a single, it's 7%. Okay? Meaning,
huge difference.
Meaning, if you have $100,000, you're able to get $70,000 in one example and only $50,000 in another.
It's 40% more money.
Yes. That's powerful.
It's a lot.
Okay?
Yeah.
So here's a strategy. If you have an and asset, if you have a life insurance component that is able to cover your assets, another way of saying it, if you're worth $1 million and you have at least a permanent death benefit of $1 million, what you could do, hear me out here, if this is Chris, he can take a single pay, get more money now, it's benefiting their family, while also not feeling guilty that if and probably when he dies before his spouse or before me, that I'm going to be taken care of because that $1 million of permanent death benefit is going to pass on to me. I could do a single annuity if I wanted to.
Totally.
And we're maximizing the cash today and in the future. I hope that makes sense because that is just one tweak that we're not even using the living benefits that I talk in my book, and we're helping people show up more powerfully today and in the future.
So let me re-say that in a way that has numbers in there because so basically what he's saying is in this example, instead of getting 50,000, you're getting 70,000, right? So take out of that 20,000 extra, you could take a small portion of it even and fund a life insurance policy.
Correct.
So you're getting more cash flow. Let's say it's 5,000 for the policy, just whatever. So your net gain on that is 15,000.
Correct.
Right?
Yes.
And then, you know, when I die, you get $1 million. You can then, so you're gonna and you're gonna lose the annuity that 70,000 or 70,000. You're gonna lose that. But now you're gonna have $1 million sitting there that you can then turn around and just do whatever's best for you in that moment.
Yeah, and I just want for the number of people we've been saying 100,000. We actually are doing math at $1 million for 70 and 50. But it's the whole concept, and that's 100% correct, man.
Yeah,
like
and that's why I just wanted to kind of like break that down from a number, like because it's important to understand that, and that's leverage. Like it's all structure. Like people, it's about like taking a step back and thinking about like return on result. What do you want this to do for you? Why are you doing this in the first place? And then figuring out how do you optimize the strategy to get there.
Yes, and 100%. And I just think it's so key. And whether you're just starting out in your career, know that the and asset. This is one example of how it enhances your life. Now let's also touch on the volatility buffer, and this one is really interesting because. What happened in 2008, Chris, when so many people had their money in the market, they went into retirement, stuff happened, and now they're saying, welcome to Walmart.
Well, so I want to touch on this just a little bit because I think it's really important. I don't want to go on a tangent about it too much because I think it honestly deserves its own video.
Yeah.
But we talk a lot about rate of return. We talk a lot about average versus real. We talk a lot about return on result. I think it's also important to talk about order of returns.
Totally.
Right?
Totally. Yeah.
And in that conversation, the order of returns is simply the market doesn't just go up in a straight 8% line like a lot of advisors want you to think it does. It's all over the place. So like if what you just asked happens in 2008, right, and the market goes down, that's particularly devastating if you retired that year, right? And your money's in the market, and you just retired and you lost your job and you're dealing with all this stuff, and now the rest of your retirement is just crushed.
Yeah.
Now, if you retired in 2011, right, and the last 8 years, 9 years have been great, okay, you're good, right? Like, so the order of return is a matter of like, when do those bad years happen?
Totally.
And how do they impact you? So that's volatility, right?
Yeah.
And so the volatility buffer here
Yeah.
is to insulate you and protect you against those catastrophic order of return nightmares.
Totally.
Does that like,
Totally.
did I say that right?
Yes,
Like,
and
I mean,
and we looked at the Vanguard nest egg in one of the other
Yeah.
videos, and really the safe withdrawal rate is less than 3%.
yeah,
And when you can eliminate some of those down years
Mm-hmm.
by having an asset that has cash that's not that the market doesn't influence, and that you can tap into that when the market's down and let your stocks or 401k or whatever recover, just by having that, you're able to double or maybe even increase that by more than double,
Yeah.
just by eliminating the losses in your life. And I'm just talking again, this is something that is not, in my opinion, the most ideal retirement strategy,
yeah,
but it's still, the and asset is enhancing and maybe increasing your retirement cash flow by double
Yeah.
by just having an asset like this in your life.
love it.
Okay?
It's amazing.
Let's talk about real estate. And because I'm visual, I'm just going to draw a little house. So let's talk about, you actually take on this idea of, you know, I'm going to buy houses and I'm going to use the and asset, fund it to buy houses, have them cash flow. But here's the deal. Do your kids eventually want to get passed down a real estate portfolio, or would they like the value of that real estate portfolio and more to be passed down in a tax-free check? I don't know.
I think everybody who inherits everybody that gets any sort of estate passed down to them would rather have cash than property they have to deal with.
Correct.
Yes.
So here's a thought, and I want to expand your thinking, because this is what we do for a lot of our clients. We help clients acquire real estate, and they can do whatever they want with it. They can literally die with it, and remember, the and asset's going to be fine regardless. But let's say you fund your and asset. Let's say you borrow against that and asset. Your money's still growing. You're borrowing against it. You're investing in real estate. And let's say the real estate's either producing cash flow or appreciating or whatever. Yeah. You have options. The and asset gives you options, and at the end of the day, you don't have to do anything. But an option that you now have available is you have the ability to sell off your real estate, and then you have a first world problem. When you do that, where are you going to put your money? Well, you have what we call this the backfill strategy. You have literally openings through loan repayments where you can dump money back into your policy, and bam, that money is all automatically, like, it's grown tax-free the rest of your whole life.
Yep.
And you have access to use it, and again, you can use it with every kind of strategy, including using the policy directly. And again, this is just an example of whether you're a business owner, whether you're a real estate investor, regardless of what you're investing in, you know that you can create a home, a room in your policies, and backfill, and you're getting the benefits of both worlds. You're getting the benefits of using your money, but then you're giving that a home to not only use it when maybe you don't want to get a call when you're 80 years old,
Sure.
Fixing a toilet, or you want to be able to make your legacy a lot easier to pass that down, and life insurance is by far the most efficient way to pass on money to the next generation.
100%. I'm sold.
Okay. Anything else, Chris, when you think of these strategies, you're like, man, this is so powerful?
No, I mean, I think you hit on most of the big questions. I think that last part almost deserves a video of its own.
Totally.
To go really into depth, because whatever. But
I'll add one more.
okay.
Reverse mortgages.
Yeah.
This is, again, don't do anything just from this video. Really seek an expert on reverse mortgages. But a reverse mortgage is essentially, you have a house that's paid off, and you can take some of that money. You can do a reverse mortgage with the bank, and the bank can pretty much say, we're going to use your house as collateral. We're going to give you a lump sum of money. We're going to give you a stream of income or cash flow that's not taxable. You get to use that, increase your standard of living. You get to use that when you want. But the problem is, what happens when you die? Your kids will either have to decide, they'll either have to sell the house or pay that off. And the cool thing is, if you have an and asset, you can have the death benefit assigned to a portion of that to figure out the house. So again, it's just like the pension maximization. You get to live more money today while still, again, covering. Most people want their house paid off because they don't want to be a burden.
Right.
And the fact is that the and asset is just a more efficient way to do it.
To accomplish it. No, that's awesome. Fantastic.
So,
all right.
In summary of this mini series, I'm just gonna go all the way back to this because I think it's so important, man. You are your greatest asset. Save your money in a place that's gonna grow the rest of your life. Actually, we should change this and call it generational growth. Also be able to control your money and use it on things, whether it's in your business, whether it's investing. Regardless of what that is, your greatest financial need is using money now and in the future, and understand your rights. I like that. Understand your rights as it relates to using your money, and be able to maximize both the growth and use. And if someone's telling you you either have to choose between one or the other, run, because I'm telling you that's a lie. Understand the value of how this money can show up powerfully in retirement. Understand that the same dollar is protecting you today, your family, but also protecting your money. The fact is, you can save more money. And I wish we could do a whole video on this, maybe we should, but you can save a whole lot more money in this strategy. And just by that, you get a lot more money working for you in the future and now. And the most important thing, Chris, is we're helping people show up as their number one asset. Whatever that means to them, we're helping them get clear on their results and actually accomplishing that in the way that they think and the way that they use their money.
Awesome. I love it, man.
Cool, man. This has been fun.
All right, brother. Well, thanks for doing that. And guys, if you haven't yet, if you've gone through the series and you haven't gotten this yet, first of all, I think you're crazy. Secondly, you need to do it. So go down to the link below, get this, and he will send you a copy. He is going to pay for the book. You can go to Amazon, you can buy it for $20 and he benefits more, but he'll pay for it. He'll send it to you. You pay the shipping, he'll send it to you. So go down to the link below, check it out, and make sure to click on the button, subscribe. We're creating all sorts of content. Caleb and I are trying to serve everybody as much as possible. So if you have any questions, engage, make comments, and
And I also want to say this, if it's all right.
Yeah, go for it.
We have a team of people at our company that wants to serve people that are interested in this.
Yeah.
And we have a commitment that we're not, like, these people are not incentivized on commission. Like, I truly believe in the power of this, that I am taking on the risk of creating an organization that says if people understand the power of this, they'll want to do it and we'll make it work. And so if at all, after you read the book or as you watch these videos, if you want to learn more, I'm sure there'll be a link below.
Yeah.
Make sure to reach out to our team. We would love to serve you.
100%.
We'd love to answer any questions, because we're, again, extremely passionate about helping you understand the power of this and living the life that you can truly live today and in the future.
I love it.
Thank you, man. For
Awesome,
letting
man.
me
You got
be
it.
able to share this.
Awesome. So anyway, guys, go out there and crush it. I hope you have an amazing day, and we'll see you on the next video.